Starting with the gold prices, and they have slipped in trade today but continue to trade near a two-week highs. The investors have turned nervous ahead of the release of Fed minutes and are seeking clarity on central banks' rate hike plans. On your screen, 1303 is holding. You have seen more than 0.25% of a decline coming in for prices. Take a look at the energy space then, and the Brent futures have declined a wee bit after 2% of gains in the markets yesterday, still holding above that 107 mark. The Ukraine crisis has escalated, but there is a steep rise expected in the crude oil stockpiles in the US, and that is putting slight cap on the prices. Let's get on board then. Vijay Bhamwani, who's author and CEO at bsplindia.com. Also joining us is Ajay Kedia, who's MD and Research Head at Kedia Commodities. Ajay, hi. Let's start with you first. What's your sense really coming in for the energy space? Because that is something that's seen strong gains in this week.
Yeah, good evening, Manisha. As we have seen, crude oil is continuously trading above $100. No doubt, geopolitical tension once again supported the prices. Maybe we can see a rally continue up to $104 in international, whereas domestic market, no doubt, rupee is continuously holding above 60 level. So because of rupee weakness, also maybe we can see some support coming on MCX prices. Also today, inventory is expected, and maybe that could also slightly support you. But overall, we expect 62, 40, 50 will be the good resistance on domestic market. One can take long position for intraday around 61.50 level. May book profit around 62.50 on higher side.
Vijay, how have been the volumes and the gainers been? Because we've seen good strength in the markets yesterday. We were not trading, but do you see a catch-up happening?
Manisha, the volumes on a relative basis will seem higher because of the lower base effect of yesterday. Yesterday was a half day for all practical purposes. What I am seeing is a little bit of an upthrust in select commodities. And speaking of energy, I would concur with Ajay that 62.50 will be somewhat of a resistance area. I would prefer to await higher levels and then start pressing shots close to the 62.35, 62.40 kind of levels, keeping a stop at 62.65, and then expecting the prices to slide all the way down to sub 6200 in the coming one or two trading sessions at best. When natural gas is concerned, I would maintain my view that the 279 to 280 area would be a better area to go short at. In the energy space, I would prefer to seek short selling opportunities rather than bottom fish.
Vijay, how would you look at the precious metals? Because we've seen some support come back into that. The central banks are buying, so is China. And of course, there are those geopolitical concerns back on surface.
Manisha, the factors that you indicated are likely to support bullion prices marginally so. So if at all gold prices were to rally from here, I think 28,650 to 28,750 would be a resistance area. I think chartically speaking, silver is showing signs of a relative strength which can take the metal to 43,650 to maybe 43,800 levels. Here again, I'm not very comfortable buying or bottom fishing here. And as far as buying is concerned, I would still focus on silver in the delivery space at the sub 41,000 levels. It's still marginally weak at these levels. If at all any upthrust is occurring, it's more to do with short covering than a complete trend reversal.
Ajay, how are you looking at the precious metal space then? Because today seems to be a good day to buy. As of now, of course, we've seen some profit taking coming in, but ahead of the Fed minutes, how would you want to put your prices up?
If we talk about gold from last 1 month, the strategy is totally different. We have seen a rally from 1240 to 1390 also, and again we have seen a fall up to 1270 level. Timing, we expect market should be slightly positive looking to the Fed meet also, and secondly the geopolitical tension. Last time we have seen market has thoroughly supported and went around $100 upside. So maybe as long as market is holding about 1296 as a 200 DMA on international, may see a price jump around 1320 or 1328 on higher side, but a little bit on higher side again we can see some profit booking. Coming to the domestic market, we have seen a very good sharp fall below 28,000 level, but sustaining below 28 is slightly questionable. Maybe we can see a jump up to 28,650 or 700 odd levels, but sustaining again on that level will be slightly questionable. Maybe one can take a long position around 28,300 for intraday purpose. Maybe we can see a jump around 650, 700 level.
To the base metal space, and they really seem to be catching up to one another. We started the year very strong for the nickel prices, and then Vijay, it has been the copper prices. You've seen aluminum run up, and the latest has been zinc, which is trading at a 4-week highs. The IMF report is good, but how are the volumes behaving with all of that information?
Here again, Manisha, you're seeing the lower base effect of yesterday's trade data, which is showing up as higher volumes. Actually, the volumes still remain close to its 10-day average volumes or even slightly lower. As far as prices are concerned, I do agree they are showing signs of trying to break above the critical absolute short-term resistances. But the correlation between volumes and open interest is not really showing any kind of exuberance or greed on the in the bull camp, which could say that prices will sustain from here. If at all prices were to go higher to say 1010 odd levels, I would like to short nickel. If copper goes to around 408 to 410, I would short copper also.
Ajay, what's your sense in the base metal sector? Where do you see the maximum strength continuing in the coming few days?
See, since last 1 week, particularly copper is trading in a very tight range of 400 to 410 level. Now there has been some report that China is coming up with some stimulation pack, but it was just below the expectation, and again market trading in a very tight range. Another metal will be aluminium. We expect there should be a good upside movement we can see in aluminium prices. As long as market is holding above 108, maybe we can see a jump up to 112 level because of LME stock issue is going on. Particularly in nickel, we have seen getting a very good resistance around 1000 level. No doubt concern from Russia is slightly supportive for the nickel prices. Any break above 1000 level may see a price coming back in the range of 1020 on higher side.
Let's take a look at the agro prices then, and take a look at the chana prices, where we have seen further profit taking coming in during the day today. The prices have been declining for most part of last 15 days. Also, if you look at the edible oil space, that has been choppy as well. We saw the first quarter do quite well for itself, but the second quarter really has started on a tepid note there. The international prices have seen a decline, and that is where the pressure is coming in for the Indian prices as well. To you first, Ajay, then what's your sense on the edible oil space? How would you look at the soybean prices in the near term?
Soybean is continuously trading with a positive note. No doubt domestically arrivals has dropped. Festival season are ongoing, because of the arrivals are slightly heated. Also last week USDA report has shown that concerns are still going on with the production size. Because of that also international clues are slightly supportive. Maybe we can see a bounce in soybean, but better book profit and go around 44.50 we can see on higher side. Coming to the refined soya oil, prices are just curtailing between 695 in lower side and 710 on higher side. Maybe some rupee weakness can add some support around 712, 715 we can see on higher side.
Vijay, how would you look at the pulses? Because while we have seen chana prices continue to decline, would you see further downside on this?
I think so, yes, Manisha. Despite the El Nino warnings, I am seeing heaviness across the board in agri-commodities. And the 3375 level, which I talked about as a fairly stiff resistance, is likely to remain in place in the absolute near term. Unless the bulls take the prices above the 3375 levels, I think every time prices approach the 3300, you are likely to see selling pressure emerge at higher levels. So I would lay off from any bottom fishing argument here. But at the same time, keeping in mind the El Nino, I would not even short at this point in time. So unless you see a panic-driven decline in the markets, one should not bottom fish. But shorting again is fraught with risk. So you may want to avoid the agri-commodity space till such time as the Indian Met Department comes out with its clarification in the mid-month.
Fair point that. What's the sense on spices then, Ajay, and how would you look at the turmeric prices for one? Because we have seen some support there.
As we have started this year, no doubt prices has rallied up to 7,500 in spot market also, looking at showing concern and quality issue. But from that level, we have seen a sharp fall and taken a support around 6,000 level, as currently arrivals are quite good. But it has been observed that farmers are not willing to sell at ultra low prices below 6,000 level. Since last 1 week, we have seen prices is getting support at 6,000 level and trading in a quite range of 6,000 to 6,500. As of now, we expect due to quality issue and drop in the production area, may see a slight jump up to 6,500. Once we are pass on this April month, then definitely we can see a upside more around 6,800 level.
And take a look at the sugar prices then, a third straight day of decline for them as well, nearly 2% on the lower side. Vijay, how would you like to see a support now?
Manisha, I'm still bearish on sugar. I've talked about a top at 3,300, and I think the top is likely to remain in place. I would not really be surprised to see prices going down all the way to 3,020 to maybe even 3,040 band. I would take a fresh view when I see those prices. If the volumes and open interest correlation talk about a pullback rally, then I would not really mind participating there. But it would have to be very, very convincing in terms of price, volume and open interest, all three fronts. Otherwise, I would stay away.
Let's get some more on the sugar prices there, and joining us for that is Janvi Prabhu. She's Senior Analyst, India Ratings and Research, and joins on the outlook on sugar industry. Janvi, hi, what's your sense, first of all, on the output numbers in India and globally?
Sugar season 14 has just closed. So we are anticipating a production of around 23.8 million per metric ton. This is as per the ISMA estimates, and if you're looking at sugar season 15, we have anticipated around 25 million metric tons. And if you're looking at the global production, we're seeing that it could be close to around 179.6 million metric tons for sugar season 13 and around 180 million metric tons of supply coming in sugar season, in sugar season 15.
Janvi, what's your sense on the prices really? Because as we were discussing, there is some more pressure that can come in for the prices here, while they're off the kind of lows that we have seen in 2014, but they are still below cost of production.
The price rally at this point of time that we are seeing is anticipating that there could be an El Nino, which in turn could result in a lower than anticipated sugar production, and hence we have seen that the prices are rallying. But given that we are estimating that the stock levels would globally would be maintained closely at around 41%, and roughly we will see around 33-34% for both the years, we see that sugar prices on an average should roughly be in the range of around 30 to 31 rupees per kg.
That's for the near term, Janvi, but for a longer term, what's your sense on the price view going forward?
If we are looking at the entire year, we expect that the sugar prices would be roughly in the range of 30 to 31 rupees, as I had earlier mentioned. This is because of the global surpluses that we are anticipating. But if there is surpluses which are going to go lower than this, then we would see international sugar prices rallying, and consequently that effect would definitely come in India. So what we are saying in our report is that if sugar prices rise to international sugar prices rise to over 19 cents a pound, then exports of raw sugar from India would be more viable.
Janvi, there have been weather concerns in India and Brazil as well. So what's the impact that you see of all of this on output and prices also?
See, basically sugar is a very water intensive crop. So a supply of water, if monsoons are not favorable, then we could see that the estimate that we have taken 25 million metric tons for sugar season of 15 could be cut down drastically. And given that consumption has been increasing year on year, the net surplus is going to go down. So obviously the sugar stocks could plummet from the 8 million metric tons that we are anticipating for this year. And if that happens, then yes, we could see some sort of a rally in prices.
All right, Janvi, we'll let you go at that. Thank you so much for joining us with your sense on sugar. That's the view then coming in from India Ratings and Research, where they expect the prices to see some consolidation. But much, as all our experts have been saying, will depend upon how the monsoon comes out. Which is just coming back to you on that final word in the agri space. So if there is, as of now, the markets are looking at a concern there, how much of a further premium would you see coming in for prices?
Manisha, that would depend on how much of an impact it will have on the monsoons. If the monsoons are short by 5 to 10%, I think prices might appreciate by 2 to 3%, sentimentally speaking. But if the problem is perceived to be significantly higher, I think you'll have food inflation going through the roof all over again. And I wouldn't be surprised to see a 10% plus appreciation almost across the board. So it all depends on how far the monsoons are likely to pay truant. And unfortunately, there are no metrics where one can make advance guesstimates, if you want to call it that. So one has to take it as it comes.